Good afternoon, everyone. Good afternoon, Robert. How are you?
Good afternoon. Really great. Happy to be here.
Thank you, Robert. Thank you. Thank you so much for this session that you have prepared with a lot of care and a lot of love, I think, because it's like I was mentioning to Marisa on her session, both her session on landed costs and this one on multi-currency are kind of tough subjects, if you will. So it's not straightforward, right? It's SAP Business One helps you take advantage
Yes.
of that scenario of multi-currency, and you explain it very well in your session that it well used, it could be a competitive advantage for companies, but it's not something that you can set up in 5 minutes, right?
Yeah, it takes time, but I'm really happy to be able to share this knowledge with our customers.
Thank you. It's very generous of you. You've accumulated a lot of years of experience. Can you tell us a little bit about yourself, Robert? How long have you been working with SAP Business One?
Yeah, with SAP Business One, I'm currently in my 16th year of being a consultant. I started working first as a support consultant, and then,
Mhm.
well, I got the opportunity to start working as an implementation consultant and been doing so since then. And I'm really happy to help customers get into the SAP Business One boat because it is a great system. It is a great solution, but it has to be implemented with care. So that is exactly what I try to do every time that I implement the system.
Thank you so much, Robert. We are delighted to have you with us at Consensus. I tell you this, so you already know, but I wanted
Thank
to
you.
to let you know here in public as well. It's a pleasure to have you as part of our team. I'm going to go through these reminders very quickly because I think everyone who's joining has already joined one of these sessions. It's being recorded, and this one, thank God, is being recorded. You probably will need to go back to the recording to see every specific detail that Robert shares. You can ask questions. I don't know if we're going to have time to answer questions at the end of this session because this presentation takes a little longer than expected. And we have right after that, we have the tips and tricks session. But if you have a question, you can definitely write it down on the Q&A or send us an email later, okay? A reminder to follow us on social media and to participate in the giveaway raffle that we will have later this afternoon. If you rate this session, you will be entered again. For every time you rate one of our sessions, you get a new opportunity to win a remarkable tablet too. You've already met Robert. He's one of the consultants who has joined us in this last year. We are delighted to have him as part of our team. And without further ado, we're going to share the content. I'm sure you're going to enjoy, and just let us know if you have any questions. I'll see you at the end of the session. Robert, thank you so much.
Thank you.
We are now, both Robert and myself, we're going to turn off the cameras so that you can concentrate on the content.
Greetings, everyone. I'm Robert, and I'm thrilled to be your guide in today's multicurrency webinar for SAP Business One. As an implementation consultant at Consensus International, I'm always helping organizations harness the power of multicurrency functionality. In this webinar, we'll delve into the complexities and opportunities of managing multiple currencies within SAP Business One. My mission is to demystify the world of multicurrency transactions, providing you with insights, tips, and best practices you need to excel in this aspect of your business. Our agenda for today is the following: an introduction to multicurrency, how to set up multicurrency, how to manage exchange rates, how to perform multicurrency transactions, how to post exchange rate differences, and how to deal with those differences, and our key points for the webinar. So, what is multicurrency? By definition, multicurrency refers to the capability of a financial system or software such as SAP Business One, to manage and conduct transactions in multiple currencies simultaneously. It allows businesses to operate and perform financial activities using different currencies alongside their base or local currency. Multicurrency is crucial for business success, and we have a couple of reasons for that. For international trade, as many businesses operate at a global scale, buying and selling products or services across borders, multicurrency support enables them to deal with international customers and suppliers, facilitating smoother cross-border transactions. For customer flexibility, offering pricing and invoicing in multiple currencies makes it more convenient for customers, potentially increasing sales and expanding the customer base. So customers can pay in their preferred currency, reducing conversion-related friction. For risk management, so exchange rates can fluctuate, affecting the value of foreign currency transactions. Multicurrency management helps businesses mitigate currency exchange risks by providing tools to monitor and hedge against unfavorable rate movements. For financial reporting, multinational companies often need to consolidate financial data from different subsidiaries or branches located in various countries. So multicurrency support ensures accurate financial reporting by allowing for the conversion of foreign currency transactions into a common reporting currency. And last but not least, for competitive advantage, because having the ability to conduct multicurrency transactions can give a business a competitive edge in the global market, attracting international customers and partners. Now we are done with our introduction. Let's go to our second topic, setting up multicurrency. So the first step to set up multicurrency is defining the currencies in the system. Let's go to our demo system, go to our main menu, go to Administration, Setup, Financials, Currencies. This is the main window to define new currencies in the system. We can see that we already have 3 currencies defined. One thing to take note is that whenever we create a new company, we select the localization settings. Those localization settings comes with predefined currencies. In this case, we're looking at the US localization. The first thing to do to define a new currency is to select the code. In this case, one recommendation is that if you plan on using any payment engine add-on or any other add-on for payments, we strongly recommend that you use internationally agreed upon code abbreviations. That way, we ensure that the banks will accept the bank file that the add-ons will generate. In this case, we're going to define a currency for our example, the Australian dollar. So the internationally agreed upon code abbreviation for our Australian dollar is AUD. Then we define a name. I'm going to copy the same code for our international code and for our international description. And then we have to define the 100th name. This setting is really important because it is used for print checks or to print checks. So the system can represent in words the numerical amount that is present on that check. In this case, I'm going to use cent, copying the same international description, and we're using cent again. Then we have the option to select our ISO currency code. This is not mandatory, but it is recommended. Let's select our Australian dollars. Then we have 2 options. we have the option to deal with our incoming amount differences allowed and outgoing amount differences allowed using monetary amounts or using percentage. This is one option, but if you use one, the other will not longer be available. So it's really important to discuss this with your accountant. In this case, I'm going to use the same settings that I have in US dollars. Then we have the rounding. This option depends on a general setting. We can select either to select rounding by document or to select rounding by currency. The differences are that when you select rounding in a currency, you have the ability to send the differences of that rounding to an account. That should be also discussed with your accountant. Then we have the decimal configuration. The decimal places are important because those affect prices, line totals, and document totals field. But in this case, we are not using the decimals at the currency level. So the system will go to the general settings to look for the decimal places. Then, last but not least, we have our rounding in payments. We have the option to select that. When you're ready to define the new currency, we only hit update and we are done. Now that we are done defining currencies, let's go to our second step. That is going to our basic initialization, company details. For that, let's use our demo system. Go to our main menu, administration, system initialization, company details. In here, we will look at three options. The first one, the local currency, in this case, is set to US dollar. The second option that we will look at is the system currency, in this case also set to US dollars, and the default account currency set to all currencies. SAP Business One can handle accounting in two parallel currencies, local currency and the system currency. So the local currency is the currency in which the company is legally required to keep its books. The system currency, on the other hand, can be different from the local currency, and this is especially useful for subsidiaries of global companies whose head office uses a different currency than the subsidiaries. In this case, the system automatically calculates all postings in the local currency and manages an additional account balance in the system currency in real time. This makes it easier to have aggregated reporting on all the subsidiaries and allows for better integration with the system of the head office. In this case, we can see that both options are grayed out. We can no longer change them. These options cannot be reverted after the first transaction is posted to the system. That is why we should be very careful with the settings that we leave here. It's recommended that you plan that in advance with your accounting and financials department. The third option is the default account currency, and that is also important because whenever you define a new account, this is the currency that the system will recommend to use. Now that we are done assigning currencies to business partners, let's go to define currencies for new accounts. Let's go to our demo system, main menu, financials, then chart of accounts. Chart of accounts is the main window for accessing our general ledger accounts. In here, we can add a new account by hitting the add button in our icons menu bar. When we hit the add button, you will see that the currency is set by default to all currencies. That is because in our administration system initialization company details, we have all currencies as our default account currency. But whenever we are creating new accounts, we can choose our different currency from the list. So whenever we define a new currency, it will appear as an option whenever we are creating new accounts. Again, the same rule of defining currencies applies to the accounts. The same rules that applies to our business partners applies to the accounts. If we have an account already set to dollar, we can change that to all currencies at any time. But whenever we do that change, we can never roll back. So if we change this to all currencies, then we will never be able to set a different currency. Now that we are done with defined currencies for new accounts, let's go to our final setup. That is how to define price lists in different currencies. For that, let's go to our trusty demo system and go to our main menu. From within our main menu, we search for inventory, price lists, and then we open price lists. In here, we can see the price list window and all the price lists that are currently defined in our system. It is possible to set an item's price in each of those already defined price lists and the newly defined price lists in up to 3 different currencies. This is useful where there is a need to define exact pricing for different countries instead of using currency exchange rates. In some cases, there will be no price in the price list whenever you're dealing with a customer or vendor on a foreign currency. By default, if there is no matching currency in either the main or additional prices of the price list, let's say we go to the sales order and we select a customer, and let's go and select a couple of items. As you can see, the customer is euro based. That is the currency. But our prices are in dollars, US dollars. So what is the system doing in this case? So the main price is copied to the item row in the document. In this case, the currency of that price is not the same currency as our business partner, as our customer. The system, SAP Business One, automatically convert that value to the local currency of that customer, to the BP currency. That is the local currency for that particular customer. So depending on the business partner's defined currency, the system will automatically calculate the price, and that price will be calculated based on the exchange rate of the posting date of the document. That is something to keep in mind. So we have two options. We can define our prices in our price lists to up to 3 different currencies. We can see here we only have one primary currency selected, but if we go to our form settings, and we can see here that we have additional currency 1 and additional currency 2 that are not displayed. So we just hit the visible option and then we hit OK. Now we can see we have additional currencies, and we can define the currencies that we need to maintain for each of our price lists. If we go in to the definition of the first price list, we can see that we have a primary currency that is US dollars, but we also can maintain the additional currency 1 in Canadian dollars and the additional currency 2 in euros. Now we know that each business partner master data record and each GL account needs to have an account currency definition. Let's explain a little bit further how that definition for GL account affects our journal entries. So in the first row, we see that if the currency for that account is set to local currency, then the journal entries are entered in local currency. Nevertheless, all transactions in all currencies are automatically translated to system currency in real time and are displayed in separate system currency columns in the journal entry. Therefore, the account balance is showed in both the local currency and the system currency. Note that internal reconciliation is performed only in local currency. In the second row, the account currency has been set to a specific foreign currency. In that case, you can enter journal entries in the local currency as well as in the specified foreign currency. You can display the account balance in the specified foreign currency as well as in the local and system currencies. But this account is only reconciled in the specific foreign currency. In the last row, the account has been set to all currencies. In that case, you can enter journal entries in any foreign currency that has been set up for the company, as well as in the local currency. The account balance will be displayed in the local currency and the system currency. And this account will always reconcile in the local currency. We have to keep in mind that we can change the account currency to all currencies at any point. But once we have updated that account, we will never be able to change it back. So that is something to keep in mind. Now that we are done with our initial configurations, to be able to conduct business transactions between customers and vendors of different currencies, we must maintain the exchange rate for each of the defined currencies. One thing to consider is that whenever we are doing a transaction using a foreign currency, the system will check if we have the exchange rate updated on the date of the document. If it is not updated, the system will prompt us to input the value. If we don't have the right or the correct permissions or the correct license type, being that license, professional or financial, we will get an error message saying that we don't have the correct permissions to open the exchange rate window. Let's move to our demo system to see how we can maintain our exchange rates. To manage our exchange rates, we go to our main menu, Administration, and the third option, Exchange Rate and Indexes. In this screen, we can see that we have two tabs, one for exchange rates and one for indexes. We can also see that in the exchange rates, the system will always default to our current month. In this case, November of 2023. Then at the table level, we will find our month with each of these dates and our different currencies listed as columns. The first one is the one that we just defined as part of this webinar, the Australian dollar. To enter an exchange rate, we just need to select the date and enter our desired exchange rate for our currency. We can set 1 or we can set the currency exchange rate for all of the currencies. If we need to set currencies for a date range, we have the option Set Rate for Selection Criteria. If we hit this button, we will get a second screen, and in this screen we will see that we have available a date range. By default, this date range will be from the first of the current month to the end of the current month. If this is our desired date range, we can leave it as is. For this example, I'm going to change this to the day of our webinar, today, November 15th. Then I will set all of my currencies, and I will enter my desired exchange rate for the first 15 days of November. So for Canadian dollar, that is 0.78. For euro, that is 1.07, and for Australian dollar, that is 0.64. When I hit update, we can see in our first screen that all the values are already updated. Now we hit OK and we hit update. We can also use the set rate for selection criteria to erase values. Let's say we want to erase the Australian dollar exchange rate, so we come to our set rate for criteria for selection criteria window, hitting the button, then we select Australian dollar, then I will change the date to the 15th, and I will leave the exchange rate blank. Then I hit update, and the system will erase all of our exchange rates. Now I will set it back to 0.64. The last feature that we have here in this screen is the auto export option and auto import option. So let's say that we have more than one company in the same SAP Business One server, and that we need to set the exchange rates for all of our companies. The auto export and auto import will allow us to set the exchange rates on the first company and then export those settings, those exchange rates, to an intermediate table. That table can be accessed by all of our other companies. So we go into each of those other companies and then we hit the auto import option, and the system will automatically populate the exchange rates based on our first company. To do that, we need to select the range, and we do the selection by holding the shift key to do a consecutive selection, or we can select random dates by holding the control key. In this case, I'm gonna mark from the 1st of November to the 15th. When I have all of the range of dates that I want to export, I just hit the auto export option. When I hit the button for auto export, I will get a system message telling me that if I really want to export the exchange rates to the common table. I hit yes, and now I'm ready to import my values in my next company. So I will go into another company that is coexisting with this first one in the same server. I go to the main menu, I go to administration, exchange rates and indexes, and then I need to make sure that I mark the same number of dates. In this case, I already have values, so I'm going to erase those values first. And then I'm going to mark from the 1st to the 15th, and I just hit auto import. And the system will copy what I just set in my main company. This is a really neat feature when you have more than one company. That way you don't have to go and manually input all the exchange rates for all the different companies. Last but not least, let's go back to our first company. We have the indexes. So the indexes refer to the Consumer Price Index. This is a widely used economic indicator that measures the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. So we have the ability to set that CPI for each of the months of the current year. This is really useful because when you set that up, you can come into your financial reports, then you go to financial, and you can use that as a filter for the balance, trial, and profit and loss statement. If we go to our balance sheet and we go to our revaluation, we can see that we can revaluate based on our CPI. So we can hit the CPI we have this index of consumer price index. We select which month of which year, and then we can filter our reports doing our revaluation for that precise CPI. So this is like a new option that you will have available. You can also export the same way that we export exchange rate. We can export the indexes. We just mark the indexes. We hit the auto export. We hit yes. In this case, if we already have entries on that table, the system will tell us that the table is already full. So we already have those values because I already did that export early. So then what we can do is that we can go to our next company and the same process again. Main menu, administration, exchange rates. But this time we go to the indexes. As you can see, I did this prior to our, but we can come here, delete all the values, update, and then I just marked again till November, and I auto import. I will get my same values again from our main database or main company. Now that we are done with our initial configurations and with our exchange rates, let's go over a couple of transactions to see how multi-currency works. So we are going to start by reviewing the journal entry document. I have an example already prepared. Well, actually not one, but many examples. So we are going to start with this one. You will see a normal journal entry affecting 3 accounts. The first one is a cash on hand account that it's multi-currency or all currencies. The second one is a cash at bank checking that it's in US dollars. So right now everything is good because we already discussed that whenever you have an all currency account, the system will allow you to do transactions in any currency, but the balance and the reconciliation of an all currency account will only happen in US dollars. The theory also explained that when you have a set account, a set currency account, the balance and the reconciliation of that set currency account will be only permitted in that currency that the account is using. In this case, we have one issue. Our last account is in Canadian dollars, and we are affecting US dollars. So what is happening here? First things first, we have a little option here with a checkbox that says display in FC. So I'm going to click here. That is going to display 2 more columns. The first being debit FC and the second being credit FC. So those 2 new columns are to input our balances or our amounts in foreign currency. In this case, those 2 columns are blank, doesn't have any values, so they're empty. Let's go and check the balance for Canadian dollar account. If we go to our balance, and I'll be clear here, I used my form settings to display a couple of interesting columns here, because by default the system only shows LC. What is LC? Local currency. And for accounts that are using a set foreign currency, you should display all in that foreign currency. You can have your system currency, but it's important to have all your balances, your balance due, your cumulative balance, everything in your FC, foreign currency. So let's display that out. We can come in our form settings and try to display all the columns that we are not looking at. In this case, I'm going to hit all the FC columns. So let's just do a quick review of what is happening here. So I see two things here. The first is that I see my $6,000 here that are in green. That is a credit balance. But I also see that in my foreign currency, I don't have any balance. And again, being this a set currency in Canadian dollars, we have an issue because we should have a balance in foreign currency. Why is that? Because the theory already explained to us that this account will always show its balance and you will always do the internal reconciliation in foreign currency. So let's click in internal reconciliation and let's see what we have. I don't see those $6,000. Why? Because the journal entry doesn't affect the Canadian dollar balance. It's only affecting the dollar balance. How can we be certain of that? There is a way here that to display the transactions that have only local currency or system currency balance. So we're going to hit that check here and we are going to look at two new lines that are showing us two new values. But here is the catch. You can't do anything because the values are in dollars, are not in Canadian dollars. So we have an issue here. This issue can be resolved doing two things. The first, we can cancel our manual journal entry and then repost it. The correct way is using an all currency account and then using your second account as a foreign currency. You're going to see that in a little while. But there is a second option for fixing this, and that second option we are going to look at in our next section for the webinar. There are tools in SAP that will help us with these differences. So right now, we won't do anything, but we already know that we have issues with that Canadian dollar account. Next, I did a second journal entry, this time doing the same thing, but affecting a euro account. And the same behavior again. If I go to the balance and I looked at the amounts, I will see that I don't have a balance in euro, but I do have a balance in dollars. And that same thing will happen when I go into my internal reconciliation. I only have $2,500. Okay, now what is the correct way of doing a journal entry using multicurrency? Let's go to an example. Now we're looking at a journal entry that is using one foreign currency account and a null currency account. But in this case, I clicked on display in foreign currency to be able to utilize my two FC columns. And I enter the values in Canadian dollars. The system automatically converts those 2,000 Canadian dollars to US dollars. Using what? Our exchange rate. The exchange rate that we already set in the system. So it's really important to understand whenever we are dealing with foreign currency, it's important to have our foreign exchange rate correctly set. And our procedures whenever executing a journal entry should always affect the FC side of the balance because we're using a foreign currency account. Now, let's go and see how foreign currency or multicurrency transactions work in purchasing and sales. So I have two examples here. Let's check at our AP invoice first. So I have an AP invoice already created. So I'm purchasing to this vendor, C Corporation, from Europe. I'm buying 3 items. In those 3 items, we can already see that one of them has a euro price, but the other 2 are in American dollars. We already learned that whenever we deal with this situation, if we have our foreign currency correctly set, the system will automatically transform our unit price from dollar to euro, and it will calculate our total document in the foreign currency. But let's be clear, it will not change your unit price. It will only convert it and then show you the total document in that foreign currency. So if we go to accounting and we look at the journal entry generated by this AP invoice, we can see that, again, look at the columns. The system automatically uses the debit and credit for foreign currency, and it will always convert automatically the same values to our local currency. That ensures that we are not generating differences. But what happens when we are paying the invoice? Let's try to pay the invoice. But this time, paying the invoice, we are going to change our exchange rate. Okay? Let's go and do an outgoing payment. I already have the AP invoice selected in euros, as we can see here. And I have my exchange rate, the one that we set up. So let's change this first and set it to 0.5 instead of 0.7. And let's utilize our journal entry preview to see exactly what the system is going to do. Let me just do something really quick here because I haven't selected any account to pay. So we are going to pay with a checking account, and we are going to input the value. So let's uncheck payment on account because that was something that got selected because of what I did. So now we are going to do a checking total and then okay. If I go to my journal preview, I will get an error. And this is one thing that I needed to show you. Why I'm getting that error? The error says account currency, and it gives me the account number, not the same as document currency. Select a document currency that is the same as the account currency. So what happens is that I selected for payment an account that it's in US dollar, and I did that on purpose because I wanted to show the error. In order to not show that error and to be able to conduct our transaction, we need to select an all currency account or a euro account. In this case, I'm going to select an all currency account, and I'm going to pay on cash. If we go to our journal entry preview, we will see that we have our cash on hand credited because we're paying on cash. We have the debit to our AP balance, and then we have a realized gain. And that realized gain is the result of the change that I did to our exchange rate. So we gain because of the change in our exchange rate. So let's convert this gain into another value by changing the 5 to 9 and doing the same thing again. So that gain becomes a loss, because now our currency, it's different. So basically the exchange rates are the positions of value that one currency has versus another. So the system will detect the currency, the exchange rate that the base document was created with. And whenever we are doing our next document, in this case, we are registering an outgoing payment, the system needs to transform or to convert all the units to our currency, the dollar. So the system is going to first check the original document exchange rate, but when we are conducting our process of paying, I change that exchange rate. I change it. So the system immediately detects that variation or that variance, and it triggers the differences in exchange rates. So this is an automatic process. This account needs to be set in our account determination, and this needs to be discussed with your accounting department, but it is an automatic process. The system will detect automatically what are the variations in the exchange rate, and it will act accordingly. This is something to keep in mind. The same thing happens when we are dealing with customer invoices or AR invoices. The same thing happens. So I have an AR invoice. I'm selling to a Canadian dollar customer, and I also sold the same 3 items. In this case, I'm selling 3 of each type. So that is 9 in total. Now I can see the same scenario. I have 1 item with Canadian dollar price, and I have 2 of them that don't have a price in Canadian dollar. What the system is going to do for us is that it's going to use our predefined exchange rate, and it's going to transform our price from US dollars to Canadian dollars automatically for us. We also recommend that if you're going to conduct business with customers on other countries, it's better to have that prices maintained. But if you don't do that, the system will help you transforming or converting that base currency to the foreign currency. Now, let's try to do the same thing with incoming payments for this customer. Let's check if I have everything ready, and I already have my cash on hand. The same thing will happen if I select a set currency to dollar and I try to pay Canadian. I will get the same error. The system is going to tell me your account currency is not correct. Please change your account. We can go into our journal entry and change that account to all currencies, and that will fix the issue. But that is not always the case. So please, whenever you get this type of error, or these types of errors, because there are multiple errors, please talk to your accounting department first before you do any changes. So to avoid that error, I'm going to change my account to an all currency account. That way we are not going to have any issues. If I go to my journal entry preview, I will see the same scenario. I will see that I have a cash on hand that is going to be debited. There's a discount account there because we are giving him, this customer, a 2% discount or discount, and we have our customer, SG Electronics, and then we have realized gain because of why? Why we have that realized gain? Because I've already changed my exchange rate. If I come here and I move this to, let's say, 70, and I preview my journal entry again, then I get a loss. So Again, this is very, very important. The settings that we have discussed until now are critical for the correct behavior of the system. We need to be aware that there are multiple things to consider before using any foreign currency accounts and the all currency setting, because it's really important to understand how the system behaves. In a US localization is easier because you are not dealing with a foreign currency, a local currency, and a system currency that are all different. But when you are starting a business overseas, the whole picture changes because you will no longer have the same currency for local and system. Because remember the theory, the local currency is the one that you are obligated by the country's law to present your books. So if you're doing business in a foreign country, you have to do that currency. The local currency of that country should always be your local currency. That is one of the most valuable pieces of advice that I can give you in this webinar. You should always consider, whenever you're doing business overseas, remember local currencies are always the ones that you are obligated by that country to present your books. Because if you don't select the correct currency, once you have started working with the system, that setting is irreversible. Please be mindful when selecting your currencies. That is a vital part of any SAP Business One implementation. If you need help with that, you can ask us. We are here to help you. We already seen how to configure the system, SAP Business One, to work with multiple currencies. We now understand how the different currencies behave. We now understand how to set up our exchange rates. And we also seen a couple of examples of documents using different currencies. Now, from those examples, we saw that there were some differences in a couple of journal entries. And I told you that the system has some tools that are going to help us with those differences. So this is the first of those two tools that I was talking about. This is the exchange rate differences. So the exchange rate differences window is going to be our first tool to deal with differences that working with different currency accounts will generate. So foreign currency accounts and foreign currency business partners post all transactions in local currency in addition to the posting in foreign currency. So the balance in the local currency comprises the foreign currency items that were translated using the exchange rate from the exchange rate table that we already saw. So using that exchange rate at the posting date or tax date of the document. So in other words, the balance is based on past exchange rates. Periodically, we have to reevaluate the foreign currency account balance with the exchange rate of a closing key date. This action is performed in the exchange rate differences window. And that window, we will find it in our financials module. So whenever we execute the exchange rate differences window, the system will generate a list of proposals for difference posting in local currency. So we can accept or reject each proposal individually. So let's go to our system and see how that works. So we go to our main menu, Financials, and here we can see our exchange rate differences. So this will pop up a window, and we can already see that we can select to check for exchange rate differences for business partners, for GL accounts, or for both at the same time. You can do both, or you can do first your GL accounts, or first your business partners. It depends on how you want to manage this option. In this case, I'm going to execute the differences for GL accounts. Then we have to work our way to our due date from and to. Since I'm using documents created today, I'm going to use today's date. And then we have to set an execution date. After that, we have the currency setting. In this case, I'm going to select all currencies because we have to check all accounts on all the currencies defined to search for differences. Remember, the system will check all accounts and will detect all differences. So now we need to select an account. That account that we are going to select is going to receive all of the journal entries that the exchange rate differences window will generate. So we need to select an exchange rate gain for AR, an exchange rate gain for AP, and an exchange rate gain for GL. And it's the same for exchange rate loss for AR, AP, and GL. So we can see here that I already have an account, and I'm going to use the same account for AR and AP, and I will copy the loss account to the AR and the AP. Now we hit execute. The first thing that you will notice here is that this screen is showing me the same accounts that we already reviewed with our examples in our journal entries. So we can see here that the system is going to show us the account code, the name of the account, the balance in foreign currency, the currency of the account, the rate of the differences, and this is the exchange rate, and we can see the amount of difference that we have. We already knew that the $12,000, $2,500, and $3,500 from the difference in euros, in Canadian dollars, and in the payroll account would show, because those were the same errors, or those were the same mistakes that we identified when generating those manual journal entries. What the system is going to do now is that it will post a journal entry to correct those values. In order to do that, we have to select which of our proposals we are going to accept. By doing that, to do that, we have to select the first column. Then we have the option to have a reference or a remark for our journal entries. In this case, I'm going to use webinar, and I'm going to use this as exchange rate differences. The only thing left to do is to add. Now that we have added our differences, if we execute it again, the system is going to tell us that on that precise date, we don't have any exchange rate differences. We can go in and review our journal entries, and we will see that we have our journal entries created for us. You can see here webinar exchange rate differences, and those differences are already fixed by this journal entry created by our exchange rate differences window. We can see that we have 3 accounts affected. Actually, are 3 journal entries created affecting our differences accounts. So now all of our values in those accounts are corrected, and we shouldn't have any differences. Remember that we were missing the 5,000 Canadian dollars and the 2,000 Canadian dollars? Well, we are no longer missing those Canadian dollars. Remember that we didn't have those $12,000? Well, here we go. We have those $12,000. So now, if I go to my internal reconciliation, I can see that I now have all the accounts, all the effects that I need to be able to reconcile this account at the end of the month, or whenever I see fit to go to my internal reconciliation and fix that. So now we know that we have 2 tools. The first one we already saw, that is for exchange rate differences. But now we have a second tool to use, and this one is called conversion differences window. So in addition to the local currency, our system also manages the data in the system currency in parallel. So if our company local currency is different from our system currency, exchange rate differences can arise. So the system can reevaluate these differences to a certain date automatically. So this date will typically be a closing day of a certain period. So the procedure is carried out using the conversion differences function under our financials module, the same way as the exchange rate differences. So there is no difference in the execution. So much like the exchange rate differences functionality, the system will propose journal entries to be posted. Those journal entries will be posted for all the conversion differences, but this time only on system currency. So we first deal with our local currency, and now we're dealing with our system currency. So it is recommended to execute the conversion differences function before running the period end closing procedure. Actually, one recommendation is that you should run both of these tools at least twice a month. But that will depend on how many foreign currency transactions you perform in your system. If you never used foreign currency transactions, you won't need to execute conversion or exchange rate differences. But whenever you're using foreign currencies, it's important at least to execute the exchange rate differences, because as we already read or we already discussed, the conversion differences affects the system currency when the system currency is different from the local currency. We can see it here. We can read it here. When system currency is different from the local currency. In US localization, this is not the case. But we will also go to our system and we will see where to find our conversion differences. So to find our conversion differences, we go to our main menu, we go to financials, and we go to conversion differences. Remember, this applies whenever you have a local currency that is different from your system currency. In this case, I'm going to execute this as if it were executing the exchange rate differences, because remember, the instructions are the same. So we are going to set our execution date for today, and we are going to use the same accounts that were used in our previous execution of the exchange rate differences. So I'm going to search here real quick in my general ledger, and I'm going to use realized gain and realized loss. So I'm going to copy the same account to AP and GL, and the same thing for our loss. And execute. We only see one difference, and this difference is on one of our equity accounts. So this is not related to any of our transactions. So it's important to be aware that for companies that use the US localization, since system and local currency is the same US dollar, this conversion differences execution is not needed. Now we go to our final section, our summary. So here are some key points. SAP Business One can handle accounting in two parallel currencies. So the local currency, in which the company is legally required to keep its books, and the system currency, which is especially useful for subsidiaries of global companies. Remember, for the US localization, local and system currency is the same US dollar. Another key point is that with system currency, the system will automatically calculate all postings in local currency and manages an additional account balance in the system currency in real time. This is done, again, automatically. Each business partner master data record and each GL account need to have an account currency definition, local currency or specific foreign currency, or all currencies. Remember, this is very important. Local currency or specific foreign currency or all currencies. It is possible to set an item price in up to 3 different currencies in a price list. This is also very important. Remember, the primary currency and 2 additional currencies. When you choose a foreign customer in a sales document, the document currency will be set automatically according to the BP currency. And remember, you can change that if the customer is all currencies. So you can change that set base currency. So the unit price of the item is taken from the appropriate additional currency if one was defined. What happens when you don't have one defined? Remember, the system will automatically convert the price to the foreign currency, but you need to maintain your exchange rate. Take that note. The automatic journal entry converts the total amount in foreign currency into local currency and posts both values in parallel. When we pay invoices in foreign currencies, in the foreign currency, the amount of the invoice and the payment are the same. Exchange rate differences can occur due to a rate difference in the conversion to local currency. Remember, if you do your AR or AP invoice with one exchange rate and then a couple of days pass and you enter a different exchange rate because of the variance in value, you can get those differences in your gain or loss accounts. The system will automatically post any exchange rate difference to the exchange rate difference account. Remember, another key point to mention here, you have to discuss this with the accounting/financials department. It's really important that any setting that involves selecting accounts should be discussed with the accounting and financials department. The exchange rate differences procedure allows us to clear the difference between the account balance in foreign currency and the account balance in the local currency. A conversion difference journal entry will balance the system currency, and it is performed in companies where the system currency is different from the local currency. This does not apply to the US localized companies. And a conversion difference procedure will balance the system currency to an exchange rate of a certain closing date. As we draw the curtains on this multi-currency webinar, I want to express my sincere gratitude to each one of you for joining us today. It has been a privilege to explore the multi-currency management within SAP Business One. Throughout this webinar, we learned that the ability to effortlessly handle multiple currencies is not just a feature. It's a strategic advantage in today's interconnected business landscape. I encourage each of you to leverage the knowledge gained today and implement these insights into your business strategies. Remember, success is not just about the destination, it's about the journey, and SAP Business One is your steadfast companion on that journey. I wish you all continued prosperity and success in your ventures. Until we meet again, stay inspired, stay innovative, and stay connected with SAP Business One. If you have any questions or require further assistance, please do not hesitate to reach out to us. We are here to support you every step of the way. Goodbye for now and have a great day.